Hey traders, Nick Shaheen here recapping the week ending 11/7/2014. An impressive week. Let's start with the scoreboard. I'll start with today, Friday. Scoreboard flat. Yes, the Dow was up 11.11%. The SPX closed 0.03 green, last second green I might add. And the Nasdaq NDX was just barely down 0.09%. The small caps RUT at 0.12%, also last minute run up. Everything was red until the last minute run up. It's like nobody wanted some red on the close. They did not want a red candle, and they succeeded on all counts except for the NDX. Who are they? I don't know. Not me. Anyway, so the scoreboard today flat. So you'd expect to see somewhat flattish everything across the board with regards to the variables that are at play, right? What do we have? We have bonds, 10-year rates, the VIX. All these are variables. So flat markets, one would expect flat everything else. Not so. VIX down 4% on a flat day, and the TLT up, which are the bonds, up 1.1%. These are bearish markets. And also bearish markets are the 10-year being down almost 3%, 2.6 or something like that. So given, if I had looked at the TLT and the TNX, the bonds and the rates, I would say the markets were down. If I had looked at the VIX, I'd say the markets are up. I look at the markets, they're nowhere. So something's not right. It's things that make you go, Not saying which way, who's wrong, who's lying, just saying. We're at all-time highs. We are at all-time highs. We are at all-time highs. Say it, because we are at all-time highs. So anyway, everybody is of an agreement that there's no potential problems going forward. That's it. We're done with the problems. Okay, this is the weekly scoreboard. We looked at the daily, told you my opinion. Now we're at the weekly. 3 consecutive green weeks, 3 consecutive green candles, however, each smaller than the other. Big bounce, smaller, although still very big, and much smaller this week. What also is good to note is the dwindling volumes. Now, the biggest volume is the one that was the reddest candle, and the second biggest volume is the one before that. So on the downside, we had heavier volumes, and on the bounces, the volume is waning. I'd like it to see it the other way around. However, it's not enough to just short the market based on that. We are at all-time highs. Okay, so this is the SPY. If I look at the Qs, I'll show you my opinion of what's going on the last few days. Also 3 candles, although this candle, the weekly candle, is doji-ish, meaning uncertainty. So this is not all-time highs, this is recent highs, because we all know where the all-time highs were during the dot-com bubble. Volumes dwindling. So let me look at the small caps. Small caps, red candle for the week. But not by much, and it's doji-ish, so also shows indecision. So not enough for me to just bail on everything. Okay, so the volumes are dwindling too. However, it's healthier. Like the bounce was on big green, and that was the turnaround. So regardless, we're at recent highs for the small caps, because we have not been able to recapture those highs from a while back, not too long ago I should say. And this is a 2-year. Now if I go back to, I forgot to point out that we've recovered all of the ascending channels that we've had. I want to point out the one I talked about when we started selling off, and we lost it right here, but we regained it, and I asked, is it going to be this dashed green line, is it going to be resistance? It's not. Now we're back trading the channel, and that's good with me. All I need is a channel to trade. I'm not married to one way or another. I just trade what I see. I keep hearing things, okay, so what about next week? I keep hearing bullish things, like there's a whole bunch of money on the sideline. People that jumped out. Well, the reason people jumped out is the experts fed me the reason of being, okay, they're up and they're not going to ruin, sell in May, they're going to ruin their year. They booked their profits and now they have no reason to trade the rest of the year. So they're not missing out on much because they booked profits to get out. So they're all in cash now. If I was all in cash and I come to a market at all-time highs with no new catalysts, am I going to go long or short? Personally, I would be more inclined to be heavier on the short side than the long side. I'm not going to short right here. I'll use credit call spreads, give it another 5%, and another easy trade to end the year with my cash. That's what I would do. So cash on the side is not a given that it's going to be positive. So, and everybody's on the same side of the boat. Everybody believes that there's no possible way we can mess this up. Okay. So what about inflation? Everybody's saying if from oh, it's not here, you measure the CPI, the CPI is not showing inflation. But when you talk to restaurants, every restaurant that reported, what they have in common, either they raise prices or they need to raise prices. Why? Because everything is expensive for them to buy. So is it not inflation? Is that not inflation? Plus unemployment is lower. Jobs numbers were healthy, and the unemployment is lowest since I don't know when, but it's at full employment, I think, or thereabouts, from the official term. So we have money as U.S. citizens, and we're spending it, and we continue spending it. And if they raise prices like Chipotle did, we're going to continue to go eat at Chipotle. So we're eating the inflation. So literally, so Yellen may be her hand may be forced. In other words, yes, the CPI is not measuring inflation as typically is measured, but it's here. So we can't be blind to the fact that rates may go up. And today, the 10-year rates were clobbered, and the bonds are up. So everything is up in the air. So nothing is for certain. So I can't get on that same side of the bus yet, full blown. I need to short some things. But there are some things I can go long next week. For example, I can go long Alibaba. Long term, it's a oh my gosh, I can't believe I almost said it. No brainer. No, there's no such thing. As a matter of fact, I forgot to mention that on the Fast Money folks, they mentioned, I think a couple of them said no brainer. It's a no brainer between here and the end of the year. Anytime somebody says a no brainer, I'm scared. No brainer. There's no such thing. If it's a no brainer, you better have every penny you own on that trade if it's a no brainer. If not, then it's not a no brainer. So there's no such thing as a no-brainer. So Alibaba, long calls. You can get long calls. You can buy the stock and forget it. You can sell credit put spreads to finance the calls if you're really bullish. So there are ways to do it. Apple, solid performance. It hit resistance at 109 from the open interest that we noted early in the week, but solid performance. You can pick your longs. There are some good names that reported. Don't take longs in stuff that haven't reported. Pick your shorts. I'm shorting Tesla. I know it goes against everybody's, everybody loves it. I'm shorting it, and as a matter of fact, now I'm short it for free because I did an Iron Condor that paid for debit spreads out in December. So Iron Condors are gone. They paid for the debit spreads. Now I'm sitting pretty with a free short, and it's in the money, even if I hadn't paid for it for free. So anyway, you can find trades that way, but don't get married with the unilateral view of things. Be cautious. That's all. This is a little longer than usual, but play it safe, and I'll talk to you next week.